Good evening, everyone. Welcome to another episode of Stock Durbar with team MarketSmith India. First, am I audible to you guys? And can you see the screen? Uh, if you can reply on the chat box, I'll go ahead with the session. Yeah. I have received a couple of responses. Yeah, good to go. Yes. Once again, a very good evening, everyone. Welcome to Stock Durbar with team MarketSmith India. My name is Ashekar Kongani, Equity Research Analyst. In this room, we also have my colleagues, Mr. Rashid Sejpal and Wakar, joining the session as well. They will also be participating in this session as the session progresses. I'll be starting this session. For the benefit of everyone, this session usually starts with explaining how the market structure is placed at the current moment for 10 to 15 minutes, and then we'll move on to stock specific queries from users. So the first 10 minutes will be about the markets and the major sectors in the markets. First, talking about market, one of the major benchmark index, that is Nifty. This is a daily chart taken from our website, as you can see here. So understanding Nifty price volume action is very key to understand or gauge the overall market of an Indian equity market. Nifty gives an overview of how the current market is placed. You can see here recently Nifty has made a new all-time high. Around this point, Nifty made a new all-time high, and that is a session where we change the market status to confirm uptrend. Since then, you can see here all the 5-6 trading sessions from there have been closing higher for the Nifty. Even though the volume is on the slightly on the lower side, but price action is very good. There was some muted action in between, but overall the market structure is very constructive at the current moment. For the broader market indices, if you look at starting with Midcap, Midcap also is trading at new all-time highs. You can see here it is trading above its key moving averages as well. And the volume front also, Midcaps we are seeing very big breakouts happening in this mid-cap and small cap spaces, especially. And when these broader market indices join the overall rally, then we will see overall markets doing well, and most of the breakouts will be successful when the participation from these broader markets is there in the market. Small cap index, you can see it has hit a new 52-week high, but overall, if you look at its weekly chart, you can see here all-time high was around 12,000 level. So that level is not reclaimed on the small cap index. So if you look at the small cap index, it has not made a new ATH. That is new. It has not made a new high. But in the last 1 year, that is 52 week wise, it has made a new all-time high. That is also a positive sign. If this small cap also joins the rally and makes a new all-time high, then there is more push to the markets which is available. And within the Nifty, if you look at the major stocks, Reliance, which has the highest weightage, is currently below its all-time high. So almost it is around 7 to 8% below its all-time high. If you look at its weekly chart, you will get an overview. Somewhere around April 2022, it made a high around 2,800 rupees. But now currently it is still 8% below its new all-time high. So there is a 7 to 8% price gap is there in the Reliance. And other major index, if you look at following, first is the Nifty Bank, but I like to point out Nifty IT first, because there is a huge underperformance of this index, majorly because of a slowdown in the global scenario, because IT services have been generating revenue from the global markets. If there is any slowdown in the global markets, IT stocks are the first one to get hit because there is no major domestic driven revenue in these stocks. So this is majorly because of global slowdown. But if this IT spaces, IT stocks such as TCS, Infosys, uh, other HCL Tech, other companies which in the IT space, if they pick up in terms of growth, definitely Nifty will further edge higher. Without the support of these major stocks such as Reliance, TCS, Infosys, Nifty was able to make a new all-time high. But just imagine what will be happen to the index if the support is there from these heavyweight stocks. That is what I wanted to point out by looking at the Nifty IT. But on the weightage wise, Nifty Bank has the highest weightage in the Nifty index, and it is also a most traded index, mostly because of its expiry contracts, which are traded weekly and monthly basis. Nifty Bank, on the other side, it is trading at new highs. You can see today's candle is not updated here. This is generally index candle will be updated around 5:30 to 6 o'clock in the evening. Apart from that, if you look at the overall index and the overall momentum wise, Nifty Bank is very constructive and it is in a confirmed uptrend, and it is clearly trading above its key moving averages, and it is also a leading index in this current one. So Nifty IT is an underperformer, whereas Nifty Bank is a clear outperformer in the current market scenario. Moving on to next few more indices before we go ahead into stock specific queries from the users. Another major index is FMCG. You can see clearly there is good amount of buying happening in this space. It has a very good support at its 21 DMA as well, which is a green line here. In the last 1 year, it has never touched its 200 DMA, which is a very positive sign on the overall front. Volumes are also on the higher side. Price action was also very good. So it is also one of the leading sector in the current market. And this also has a very good weightage in the overall Nifty and Sensex index. Stocks will be taking another 2 to 3 minutes later. We'll be answering your stock specific queries. Also, please be don't push your queries at a time, because it will be very difficult for us to go through or scroll down the chat box. We'll try to answer as many queries as well in the session. Next is I have covered banks and then IT, FMCG, then I'll move on to pharma. Nifty Pharma also had a pretty much of underperformance during February and March, but in the last two months from May, June, there was good buying happened in this index. Overall, it is not a still it is below its all-time high. It didn't make a new all-time high. It is also one of the laggard in the overall market. But if you look at the short-term momentum, definitely this index has done very good in the last 2 to 3 months of time period. I'll take this index and then I will be going towards stock specific queries. Nifty Realty, you can see here also a similar scenario with compared to Pharma, even though it made a new 52-week high. But on the overall front, it has not made a new ATH, a new all-time high, which was made in 2021. Is still an all-time high for the index. But the momentum wise, this is also picking up very good from the lows made in March. That is 3 months back. There was very good momentum in the market in the Realty index. So momentum wise, Realty Pharma are doing good, but on the overall front and index 18 new all-time highs. Nifty Bank clearly an outperformer, FMCG and clearly an outperformer. On the overall front, on the downward side, if you look at IT, has been a major laggard in the market. Once again, I'd like to go back to Nifty and then we'll go into stock specific queries. Then starting with the Nifty, you can see Nifty has a very good support at its 21 DMA, which was pointed out in most of our mailers as well as our evening morning podcast, which we do regularly. For the short term, this level 21 DMA is going to be a support for the index. If that level is breached, which is most likely unlikely to happen, and the current market is very good support for the market. Good buying is happening in the market. So, which is for the short term, that is for the period of 2 to 3 weeks, we are not expecting this level to be breached. But anything can happen in the market within a one trading session. Anything can happen. But this overall, on the probability wise, we are expecting the market to stay on the higher side or at least move sideways rather than coming back towards its 21 DM. But if that level is breached in the even though it's, the probability is lower, but if that level is breached, stay cautious. And also for your portfolio positions, please be watchful. Most of your stocks will also hit stop losses by then. So by then you should exit a few of your positions uh, from the market. Talking about model portfolio, we have been doing really good. Even though recently we changed the market status to confirm that trend, we have been adding stocks from long back. We have added many stocks to portfolio, which have done very good. We have clearly outperformed the market for the last 1 month period and 3 months period. Both the Nifty and benchmark, Nifty and Midcap, if you are comparing, definitely we have done very good thanks to the momentum and which is there in the market. Whenever there is momentum in the market, our cancel methodology will do wonders. When there is a sideways market, will be pretty much in line with the market. But once there is a upward momentum, then we'll be generating a 2 to 3x of returns generated by the market. Now this is also this there is a clear disclaimer that we are not boasting about our returns, but I am just stating facts which are historical based returns which are generated by our model portfolio. I think we can move ahead with the queries now.
Yeah, sure, Rajshekar. We can start with the queries. And yes, it was excellently explained by Rajshekar about the information about the market. Yesterday only we had come out with a report about Nifty, the market's at all-time high, and what next. So some of you who might have missed to read that report, it will be available on Twitter as well as on our website as well. So you can go through that report. So main thing that we had identified over there and what next. So few things you need to look now is the 10 EMA, the 21 DMA and the 50 DMA are the levels to watch. अभी मार्केट इतने हाई पे है तो दो तीन चीज ये देखना पड़ेगा कि फर्स्टली इट्स 8 days when the Nifty has closed in the green, right? Today is the 8th day when the Nifty has closed higher. 21 DMA पे strong support है. Last 2 महीने में पहले भी मिला था, like 1.5 month back. अभी recently भी 8 sessions back also you got support at the 21 DMA which Raj is highlighting. ठीक है, so वहां पे एक support मिलेगा. Some flags you need to watch out for is the low volume. If the rally is on a low volume, if the price action is more, like see recently you might see in last 2-3 sessions the volume is below average. अगर आप volume bar में देखें तो volume below average है, but the movement is a bit sideways, थोड़ा sideway movement. ऐसा नहीं है कि market 300-400 पॉइंट एक साथ भाग गया low volume पे. That is not the case. So if you see something like that, then that's a first red flag. Second thing, if we are consistently closing for 2-3 sessions on the lower half, या फिर एक इंट्राडे रिवर्सल आ जाता है, then that is also negative for the market. On the flip side, अगर मार्केट थोड़ा कंसोलिडेट करता है, 10 EMA के आसपास आता है, 200-300-400 पॉइंट की रेंज में साइडवे होता है, that is fine. If you look at the rally in the last 3 months, 31st मार्च को हमने 21 DMA रिक्लेम किया था, वहां से कंटिन्यूस रैली है, तो बीच बीच में अगर साइडवे मूवमेंट आता है, then that's a not matter to worry. So okay, let's start with Ethos, the first stock. Okay, so you can see over here, the stock has just formed a stage 3, I think. Yes, it's a stage 3 consolidation base. It's a recent IPO. I think last year ही IPO आया था. But sorry, in a very short time, it has formed a third stage base. And overall, if you see, the relative strength is at a new high at 87, and you can also see it's a part of blue dot list. The EPS strength of 98 is good. Price strength is quite well, sustaining around the pivot level. But let's see how it moves on. Currently, it is near its ideal buy zone. We want some number of funds to be more to come over here. And overall, if you see, अगर इसका luxury market आप देखो, it is mostly into the luxury watch market, right? So it can be something big into the luxury retail. It's a part of stock, and the way the India's per capita income is increasing, our consumption is increasing. तो ये पूरा उसके साथ इसका story link होता है, ठीक है? So overall, the fundamentals, the growth drivers are decent, but I think some technical momentum, थोड़ा अगर volume आता है on the higher side on the movement, then that might be very positive for the stock. On the downside, if you are holding, then you can use 50 DMA as a stop loss. It has found good support at 50 DMA for a few times. But if you are buying at around these levels, then you should always follow O'Neill stop loss rule that we always have, 7 to 8%. 8% is the maximum loss from your buy price that you can take. So that can be followed. Okay, next we can take Triveni Turbine. So it is making a flat base stage 3, okay, and it is consolidating. Just as a disclaimer, but that this was the part of our model portfolio stock, and we made a very good return. So last time जब ये breakout हुआ था, we had added it to our portfolio. It gave a decent return, and yes, so we had booked some profit over here. Just our profit booking, rules we followed and booked the profit over here. Otherwise, the fundamentals, the growth drivers, the number of funds, you can see last quarter 31% increase in the number of funds. And baki sab agar ratings dekho, EPS, price strength, buyer demand, everything is excellent. Currently, low volume consolidation, very good for the stock. It is finding support at 50 DMA. Let's see, guys, if you see our watch list also, this is the part of our watch list as well. If we see the stock rebounds well from the 50 DMA and break out from the higher volume, okay, these are the type of stocks that need to be in your watch list, and you should look for something like this. The 50 DMA pe high volume rebound hai, ya fir again it is re-breaking out. Okay, so these things need to be taken care of. Otherwise, the growth story is excellent for the Triveni turbine. I'll take one more, HDFC Life. So there is a huge run in this stock. I think recently even the promoters buying the stake, the HDFC buying the stake over here, right? And if you can see, it has broken out last month, and from there the momentum was very good after the breakout in the second half of the May, right? Currently it's a bit extended from the ideal buy zone, 16% above the pivot, and also some around 12-15% above its 50 DMA thoda wo extended hai. So ideally not a great time to add the fresh position according to O'Neill methodology. Let it form a fresh base. यहाँ से अगर एक नया base बनाता है, and when it re-breaks out from there, that is the point when you should go behind the stock. In case you are holding the stock, then 21 DMA can be the level of your stop loss, because 2-3 times after the breakout, yes, 2 times it has found very good support at 21 DMA. So on the closing basis, 21 DMA can be used as the stop loss.
Thanks, Rushit. Vakare, I'll take some queries from you. So Raj, can you give me the chart for Jupitor Wagons? Yeah. So as you can see, the stock broke out from a stage 5 cup with handle base, and what we always say that later stage bases are, prone to failure. Very few are the ones who are, I mean, these cases are rarity where, I mean, stocks, I mean, break out from the fourth, fifth, or the sixth stage base and go ahead. I mean, there are very few the stocks like that. But I mean, apart from that, why? I mean, if we try to dig in some reasons behind it, I mean, it's a good growth story that is, I mean, accelerating for the stock. Very good ratings. Plus, as you can see, on a lower base, I mean, the number of funds on a lower base has been increasing on a very high scale. And similarly, even if you look at, I mean, whenever the stock is moving high, the stock is moving high with volume. So, I mean, that is the only good thing I can see with this stock, that the institutional investors are showing interest in this stock. But still, as we are rule-based investors, we will not, go run behind chasing any stock that doesn't fit our rules criteria. I mean, if going forward, if uh, the stage count of the stock gets reset, I mean, there is some correction maybe to the 21 DMA, 50 DMA, and the previous lows of the earlier base gets, broken out, then, and if a new stage gets formed and the stage count gets reset from 5 to 1, maybe at that point in time, it can be a stock to watch out for. The other we can look at it is Federal Bank. So earlier, not, this time, but earlier, I mean, more than 8 months back, the stock was there in our model portfolio, and we were able to book some handsome profits. I mean, this is the stage three consolidation base that is getting formed. When it was broken out from the stage two base, we did add it to our model portfolio and book some good profits. As you can see, the stock is still able to deliver very good results. I mean, even if you look at the December result or the March result, has been very good. And if you look at the current situation, apart from the price strength, all the other things have been working still well for this. For Federal Bank, your fund holding for the stock has been improving. And similarly, you can see in the last 4 to 5 sessions for this stock, I mean, your RS line has started to move higher. Plus, the stock is moving higher on above average volume. So, I mean, that is a very good sign. That is signs of accumulation. And if that moves ahead, I mean, and the stock is able to break out on above average volumes, I mean, barring the price strength, I mean, all the other boxes gets ticked at the moment. If even the price strengths get increased, then again, you have to. I mean, I didn't look at that. Your EPS is due in 7 days, so I mean, we tend to not enter into stocks where your results are up and due in probably in the next 5 to 7 days. So I mean, because results tend to bring your uncertainties with them. So I mean, if market is estimating a certain result for the stock, and if the stock is not able to deliver on those lines, you can see some kind of breakdown happening. And if the stock is able to beat those results, I mean, beat those estimates, then you can see a good rally happen. So wait for the result to come in, wait for the market commentary, wait for the management commentary to come in, let's analyze it. And if in that point, if after that, if the stock is able to break out and is there in the ideal buy range, can definitely look once the result is out.
Yeah, thanks, Waqar. I'll take few queries now.
Okay.
Yeah, I'll start with Vesuvius. This stock has a very good set of ratings. If you look at this box, most of the ratings are looking very good. EPS of 85. That is predominantly because of consistent growth in terms of sales and EPS the company has generated for the last 4 to 5 quarters. That is reflected in the high EPS rating of 85. Cash strength is also pretty much very good. That is because of stocks outperformance when compared to the general market. This has outperformed outperformed nearly 85% of the stocks. That is indicated by the RS rating of 87. Buyer demand is also very good, which is B plus. That is indicating a good amount of accumulation happening in the stock. You can see here most of the blue bars are above average volumes and red bars are below average most of the times. That is the reason that indicates accumulation happening in the stock. Ratings wise, it is looking very good. Currently, stock is trading slightly below its pivot. It has tried to break out from its stage to flat base in the last week, in the current week, sorry. But it found some kind of resistance around 2500 to 2510 rupees of levels. In the two trading sessions, it found a slight resistance. And from there, it trying to rebound and again coming back towards the pivot. But this is not a positive sign. Of the stock should break out on a good volume and should advance higher in the next couple of sessions or in the next 1 week. But that is lacking in this particular stock. But if the stock breaks out in the coming week and on the volume is also on the higher side, definitely a very good contender for addition. But in the current market, when the market is doing good, when the Nifty and broader market are doing good, you'll see lots of stocks breaking out from their base patterns. It is very difficult to pick and choose a few stocks to add them to portfolio. If you're adding all the breakouts to your portfolio, then definitely you're not going to outperform market. Market is nothing but a bunch of stocks, and if you're adding most of the stocks to your portfolio, you're not going to outperform. Your capability or your ability to generate good returns will be dependent on the pick on the stock picking. In this current market, you need to be very specific and you need to be having exposure towards only very few stocks which you believe and which you have good conviction. So in this market, you'll see lots of stocks which will be giving breakouts. So you should not go and add all these breakouts to portfolio. That is what I wanted to point out. And if you have the stock in your portfolio on the downside, I can keep 21 DMA, which is another 5% from the current market price as a stop loss. 50 DMA is slightly further. It is around 11% below from CMP. So depending on the buy price, you can either keep 21 DMA or 50 DMA as a stop loss. Next is AU Small Finance Bank. This stock is also very similar to the previous stock in terms of chart pattern. Even though they are in completely different businesses, but the chart patterns are looking good. You can see this stock is also trying to break out from flat base, which has formed the last 1 month of a period. It is trading just 1% below its pivot. On the fundamental side, this AU Small Finance Bank has been doing very good. It has been generating good set of growth and also generating good profits to the investors. And overall, that is reflected in the EPS of 94. RS rating is also pretty much good. In the previously, it has made a blue dots, but due to this flat base formation, that is stock moving sideways, there is slight underperformance of the stock when compared to the overall market. That is the reason our price strength has come down slightly to 73, but it is considered fair enough according to our methodology. Ratings wise, it is looking good, and if it breaks out on good volume, definitely a very good contender. Volume is lacking in today's session. You can see, even though price action was very good, stock closed 2.5% higher and near base high, indicating very strong price action, but volume action is not good, 10% below average volume. So this is not a good thing when the stock is forming right side of the base pattern. and it is when the stock is trying to break out from the base pattern, the volume should also be on the higher side, accompanying positive price action. Then only it indicates a very good, strong. It will be a very good container for a stock to generate 20 to 25% in a quick succession.
Thanks, Raj. I can take Electrosteel first.
Okay. Electrosteel, right?
Yeah.
Okay.
So there's a very good run in this stock. If you can see, it's a relatively smaller stock with around 3,500 crore of market cap. The number of funds are unchanged. This is one of the leading player in the DI pipes and the leader in India in the DI pipes. जो पानी बेचने के लिए generally use होता है mostly. So this company is one of the market leader in that, not only in India, but their export division is also doing really well. And I was looking few things sometime back. They are planning to increase their current capacity by 32% by FY25. So in next 2 years, or I think next 1.5 year, इनका capacity 32% increase होने वाला है. Also, in the recent con call, the management was mentioning that they are planning to reduce the debt to zero. So it will be a zero debt company in next 2 to 3 years. So in FY26, it is expected ये debt free हो जाएंगे. So overall, it's a good business. Profitability धीरे-धीरे बढ़ता जा रहा है. Once I think the debt is settled and इनका जो capacity expand हो जाएगा, then along with the revenue, I think profitability also might come in. So if you can see the earnings, the EPS is around 1 to 2. So अभी recently इतना growth नहीं हुआ है, but they are able to maintain that level. But I think with the time they are planning that they might do like the earnings, the profitability might increase with the increase in capacity and reduction in debt. And the overall business environment for the DI pipes, the demand is also decent. Not only India, globally also. India में अपना हर नल से जल वाला plan देखो. So the government infra देखो. So उसकी वजह से वहाँ पे भी एक momentum रहेगा. But yeah, overall, if you see technically, it is quite extended from the base. There was a breakout के बाद I think result के बाद थोड़ा fall आया था. Then again, just before its 21 DM, it rebounded strongly and it is up 34% from the pivot in 39 days. So this needs some time to consolidate, form a fresh base. And I think the EPS strength थोड़ा improve हो जाए, one good quarter, and you see that the end factor लगने लगा है इनका, the end factor is coming up in their earnings. So that's where you can go behind the stock. But yeah, one more base formation and some improvement in the earnings. That's what you need to look for as far as the Electrosteel cost is concerned. Yeah, on the flip side, if someone is holding, then 21 DMA can always be used as a stop loss. It's somewhere around 7 to 8% from the current level. There is other questions, a lot of questions related to PSU banks. It has been the sector in the momentum. So Raj, can you get a Nifty PSU bank chart? Yes. See, broadly, what's driving this rally is since last few years, the balance sheet has been improved really, really well for the PSU banks. Okay? Now these banks are well capitalized. There was a time 2-3 years back, ऐसा नहीं बोल रहा हूँ 20-30 साल पहले कि एक ही डिस्कशन होता था कि गवर्नमेंट कितना पैसा देगी PSU बैंक को, कितना कैपिटलाइजेशन होगा, बजट में that was always a focus. But I think now the narratives has changed for the PSU banks. Now they are decently capitalized. Okay. Plus India is we are in the place of a multi-year credit cycle. Credit growth cycle multi-year वाला अपने यहाँ start हो गया है already. And you look at the deposits, you look at the advances, even the NIMs. So NIMs were very low for the PSU banks. But I think since last few quarters, the NIMs have been stable. They are growing and they are now at a decent place in a very good competition to the private players as well. And yes, the profitability is increasing, plus the asset quality has improved. So all the front, there is a tailwind for the PSU banks. And we saw that a few months back, there was a very huge rally. You can see in this chart in the PSU banks, there was a very, very huge rally. Then it went sideways a bit, थोड़ा correction आया, वहां से off-ice गया. And before 200 DMA, it again rebounded, and now it looks like the rally has begun again. Look at the volume in last few sessions. The very high volume accumulation in many stocks. There are a lot of stocks who has recently broke out from the base. There are also stocks, that are forming the right side of the base. So if you look at the stock specific technicals also, they are really, really strong as far as the PSU banks are concerned. So just to take example, yeah, few I will take one. We can take Can Bank. There is one question. Canara Bank. Yes, the stock is forming a stage 1 cup with handle base, and it is very close to its pivot. It's as a disclaimer, it's a part of our watch list. It's not in our portfolio list. It's just a part of our watch list. The stock is trading at its pivot. So now what you need to look for is a breakout on a very good volume is what you need to look for. If you see the handle portion, so after that 2-3 big negative candles, that was very muted action. So this is what ideally you want in the handle part, a muted action plus a good support at the 200 DM. So all the key moving averages are not very far from this stock, so that is also a positive over here. Plus the fundamentals are excellent. They have since last few quarters back to back, they are able to deliver very, very good result. And even the number of fund holdings is bar to, I think come as if 3% growth hua hai. But if you look at last 1 year, the number of fund holding growth has been really good. And look at the EPS. The EPS growth is more than 50% every time since last few quarters. Even the sales in last 2-3 quarters have been very good. So the fundamentally, these stocks, the PSU banks are doing very good. And overall, yes, but what you need to look for is a breakout on a higher volume. And I think broadly the same story remains for most of the PSUs. So we'll not take all of them, but yes. So now we'll move to some other stocks as well. We can take Delta Corp. Okay, so the stock broke out from its cup with handle base. It was a stage 1 base. The breakout was in the early first half of the May. And since then, it has been in a very good momentum. The stock is already up 20% from its pivot and approaching its profit booking zone. So the green shaded portion that you can see over here, that is a 20 to 25% zone, which is an ideal profit booking zone. Whenever the stock has formed a base pattern, and if it advances 20 to 25%, then that's an ideal profit booking zone. Either you can trim some part, or you can hold entire, or you can book full profit. That depends on you. But broadly, O'Neill always suggests to book some profit over there and get into the new fresh breakouts, which can give you a better return. But yeah, sometimes it happens that if there is a quick run in the stock, like in less than 2-3 weeks, if the stock is up 20%, then we call it as a power to pivot. And whenever the stock hits power to pivot, we tend to hold it for a bit longer time. So that's not a problem. Over here, the buyer demand is good. Earnings is a bit problem. EPS strength is not that strong. And the revenue in the last quarter was also a bit volatile. Overall, if you can say, that's casino plus the hotel business. So the hotel business, the resort business is really, really good in India. Since last one or 2 years, that has been performing really well. The fundamentals have improved, and I think the traffic in the casino business is also decent over here. But let it pull back. Agar 50 DMA पे आके फिर से rebound होता है, then that is the alternate entry point. Otherwise, wait for the fresh base to form over here and some good earnings this quarter.
Rushit Vakare.
Yes.
Yeah, I'll take some calls. Raj, can you give me the chart for Minda? Uno Minda. Uno Minda. Second one. So this particular query, I mean, yeah, okay. So it's a stage 4B consolidation and again a late stage base. So maybe, I mean, as you already pointed out, that late stage bases have higher chances of failing. And one, so you can see the stock did try to break out, but it was unable to break out, and it has come down to its 50 DMA as well. I mean, probably cutting down the long story short, I mean, whenever you see stocks forming highest later stage basis, try to avoid them. I mean, you will always get chances where the stocks are forming early stage base like 1, 2, and 3, and that is where probably the ideal runway for the stocks lies always. The other we can look at it is ABB and then PowerMech.
Which one?
ABB India. Yeah. So the stock formed a saucer with handle base some months back and broke out somewhere during the first breakout was during the month of May, and then it came down. It tests it 50-day moving average, reclaimed it. It went higher. It's one of the key beneficiaries of the infrastructure spending happening in India more from the government front. And as you can see, it has been garnering more and more uh, interest from your institutional investors. Quarter on quarter, you can see on a good market capitalization as well, the fund holding have been improving very well. I mean, 645 funds are invested, and quarter on quarter, you can see 13% of the funds have been improving. On the technical front, if we see post the breakout, I mean the re-breakout, if I say it, your 21 DMA has acted as a good support for your for this stock, and the stock has never broken down its 21 DMA. Currently, also the stock is very close to the 21 DMA, and also in its ideal profit zone, what probably Rushit was talking about for the earlier stock, that is the green line. It's slightly above that. So if a breakdown on the 21 DMA happens, maybe considering on your risk appetite, I mean, you can either partially book profits or completely exit the stock, seeing the price volume action. If your volumes are high, maybe, I mean, it's good to probably exit the stock and look at some other stock as well. Next, we can look at it is PSP projects. So the stock is forming a cup with handle base, but as you can see about the ratings first, I mean the ratings for the stock have not been good. Your buyer demand hasn't been good. Your price strength is poor. Why? Because whenever you see the stock tries to break out or tries to approaches the pivot, you can see big red candles coming in, and big red candles would come in with volumes. As you can, you always see whenever the stock has fallen, the stock has fallen on above average volumes. I mean, for the last 3 quarter results, as you can see, the stock has your EPS have been declining on a YOY basis. So, I mean, similarly on the real estate front as well, I mean, the index has not been in momentum as well. And similarly, you can see whenever the stock tried to break out, it came down. It's trading below its 50 DMA and close to the 100 DMA at the moment. I mean, considering the fundamentals, considering the ratings, and even the technical setup, it can be an avoid at the moment.
Thanks, Vakar. I'll take a few queries now. I will start with Astral. This has been asked more than a couple of times. Astral, very good stock on fundamental side. It has a very good rating of 89. But if you look at the stock's price volume action and why it is important for the stock to close above pivot is can be seen here. The stock has pivot of around 2000 level, let's say, but the stock has faced a resistance around 2000 to 2020 level. For the last in the last 1 month, it has faced a resistance more than 2 to 3 times. This is a classic example why you should wait for the stock to close above pivot, and also the volume should also be on the higher side when the stock is closing above pivot. Then only the conviction of the breakout will be on the higher side. Until then, there might be some here and there fake breakouts happening in the market. Some retailers or some big guys might push the price higher to pump up the stock price, but if the volume is lacking, definitely it's an avoid whenever stock is trading near pivot. Prior to that breakout, the stock had a very good momentum from 1300 levels. It has moved to 2000 levels, clear uptrend of 700 points with no major obstruction. But at the pivot, the stock faced a clear resistance, and from there it moved sideways and it tried to break out, but breakout had not happened. And and again, the fifth set of selling came in the last 3 to 4 trading sessions, and its 21 DMA has also been breached. Price action was very weak. Volume side also big red bars have seen in the last 1 week as well. So price action, price volume action has slightly deteriorated recently. That is the reason RS line has also come down in the last 10 trading sessions. RS rating is still fair enough, but the stock needs to find good amount of support at its 50 DMA, and then if it moves sideways and comes back to the pivot, then will be a good consideration for the valuation. But on the other ratings wise, it is looking good. And one more parameter, which is number of funds, has come down slightly in the recent quarter. Which is not a good sign. We would want the number to increase on quarter basis. EPS also, we have seen a couple of in the last 3 quarters, couple of quarters, there is a declining in profits, which is not a positive sign. Even though the sales have been growing consistently, the profits have been hit, which is not a positive sign. Return on equity is at the threshold level, which we look at almost at 70%. So on the return on equity, it is okay-ish, but in the price action, it is not looking good. Technicals have deteriorated and stock facing resistance at pivot. And in the current market, when the market is hitting new highs each day, broader markets are also making good advancement in the market. This stock is moving in the reverse direction when compared to the market. So definitely not a positive sign. If you're looking for fresh addition, definitely avoid this kind of stocks. And if you have this stock in your portfolio, currently it is breached 21 DMA. You could have exited at 21 DMA breach. But if you are still holding, you can keep 50 DMA, which is another 3.5% from the CMP as a stop loss level, and you can exit and look out for stocks which are breaking or which are leading the market in the current scenario. Next is West Coast paper. At one point of time, the stock looked very good, both in terms of fundamentals and technicals. But in the last couple of weeks or more than that, you can see the stock has clearly underperformed the market. The trajectory is towards the downside. When the market trajectory is on the upside, this stock is clearly moving in the reverse direction of the market. Again, a negative sign. Stock also breached its key moving averages. 50, 100, 21, all these moving averages have been breached. Currently, there is no major support for the index. This 460 to 470 level might act as a slight support for the stock, but those levels are very tricky. There is no key moving average. Mostly key moving averages will give good support, but those levels have been breached. Definitely avoid at this particular point. RS rating is in the lowest category of nearly 30. Buyer demand is also very poor, mostly because of big red candles, which are seen more often than the blue candles. Technical wise, the stock is beaten down. It is a clear underperformer in the market. Go with outperformers. Stay invested in the leaders. When the market is in upward trajectory, the growth is on the upside. Definitely stick for breakout stocks which are breaking out or giving alternative 5 points. Those stocks will do good in the current market scenario. There's one more question on Rolex rings. Disclaimer here is this is our portfolio stock. You can see here it is highlighted here as well. We have added on June 20th. The report was very good. Price volume action wise, it was very good. Uh, but from there, the stock moved sideways. Uh, there was no major selling happening after the breakout. There are a couple of sessions of down move, but the volume you can see in the last 1 week, volumes have completely dried up. The stock is consolidating near the pivot level. That is the reason we are still holding it. And major key moving averages are not being breached. 20M DMA is still not being breached. So we might exit if the 21 DMA level is breached. If you are looking for efficiency, it's not a good. Uh, Currently, it has beaten down after breaking out. We would like to see the stock to move upwards and upwards on the high volumes, but the stock has moved sideways. Overall market is also very conducive for breakouts, but the stock has not done good. Uh, there is a good support or fresh buying happening in the stock. Definitely, we might see good set of return happening, but until then, we are expecting the stock to move sideways and slump. There is a 10 to 15% gain, then we might exit from the portfolio.
Raj, I can take Kirloskar Ferrous. Ferrous. I can see the stock has a very good strength over here. Before forming a flat base, it had formed the ascending base. And this is very rare. I think not all the stock forms the ascending base. And look at the ascending base formation. It is just above that 50 DML level. And after that, there was a good run and then forming a flat base. So this is a part of our watch list. The stock has good fundamentals. The fundamental profile has improved. ROEs of 22 plus the number of fund holding has also increased. So the Kirloskar Ferrous basically deals in the casting and foundry grade pig iron manufacturing. So in foundry grade, they are the market leader. 45% roughly इनका market share है. Even ferrous casting में इनका 20% का market share लगता है. And जो इनके major clients होते हैं, if you look at the major clients, that is auto and capital goods. So now if you drill down to auto and capital goods, दोनों sector अच्छा काम कर रहे हैं. In autos, the demand is good. You can look at the auto stocks, then the demand of cars, the demands of PV. And basically इनका जो ट्रैक्टर का डिमांड है ना उससे ज्यादा इम्पैक्ट होता है. सो आई थिंक विद द मॉनसून गोइंग वेल और जो वो अल नीनो का पॉसिबिलिटी अभी थोड़ा आगे पीछे हो गया है तो इट इज एक्सपेक्टेड दैट यस ट्रैक्टर डिमांड माइट आल्सो पिक अप. And so these are some of the main clients of this customer, this Kirloskar Ferrous. Also, capital good industry in India is on a bull run, and there is a lot of growth in the capital goods. So that's fine. अगर broadly बाकी बात करें तो they are going for some capex. They will increase the capacity. इनका backward integration हो रहा है, so margin improvement का plan है इनका, ठीक है. And overall they have also acquired ISTM, like Indian Steel Metal Tubes Companies, ठीक है. तो उनका जो ट्यूब में है और alloy steels और ट्यूब्स जो कि ISTM का मेजर वर्क है वहां से भी इनको एक इंक्रीमेंटल रेवेन्यू मिलेगा. सो ओवरऑल इट्स अ गुड प्ले. Let it break out on a higher volume. It is moving sideways near its pivot. You need a very good volume and a breakout to sustain. Okay, next we can take is Sun Pharma. Yeah, overall, the pharma stocks are doing well. I think in the beginning only Rajshekar had shown you the Nifty pharma chart and the way the pharma is picking up. It has formed a very, very good structure. So double bottom, एक थोड़ा ideal double bottom जो दिखते हैं. Price action में वो follow हुआ है, but not in the volume. If you can see volume, when the stock was making the second leg of W, right, in the last couple of months, the volume was a bit little higher. However, on the right side of the base, which I think before the breakout, वहां पे भी एक incremental volume मिला है इसको, but ideally we look for a bit lower volume over there. And you can see RS line needs to improve. अभी relative strength सिर्फ 49 है, and you need some improvement over there. So once the RS improves over here, then there can be some good momentum in the stock. Overall, this chronic drug manufacturing players, inka growth expectations is very good for the year. I think there were few problems, but now they are sorted, and these chronic players might give a very good growth. in the business in the 1 or 2 year, but some more technical improvements over here is needed. Ideally, it's trading in an ideal buy zone. So if it comes under your watch list, your radar, then yes, this is the in an ideal buy zone. If you are buying somewhere in the ideal buy zone, then 21 DMA, 50 DMA, or 8% is the stop loss level. You need to always look for. I'll take one more query. There are some comments that we need to do it faster, but that doesn't make sense. You just rush through all the queries that won't make sense. But I think we always try to manage a decent pace. Okay, so let's go for IDFC first, bank. Okay, so again, as a disclaimer, this was our part of our watch list, of our portfolio in the last couple of months, and we got a very, very good return over here. So yes, the entire area that Rajshekar has covered, so most 80% of that area, we got the profit. We booked the profit, a decent one, more than 20% in our ideal profit booking zone. Now the stock is moving sideways near its 21 DMA and trying to rebound from there. Overall, the fundamentals have improved for the banking industry. We had discussed for the PSU bank. Similar, you can apply for the IDFC banks also. Here also the credit growth. Even I was looking at this recent update, जो last month का, जो last quarter का उनका Q1 का अभी update आया है. That is really good. You look at the advanced growth, credit growth, that has been very well. So now some here and there and some volatility, I think due to the merger of IDFC First Bank with the IDFC one, something similar to the HDFC thing is going on over here. So वहाँ पे थोड़ा एक volatile है. Otherwise, it's a good long-term story, sustainable, fundamental, and whenever it gives a second opportunity, it forms a new base and breakout. It's a good time to enter the stock. On the flip side, if 50 DMA से पर जाता है, वहाँ से rebound होता है, that is also an ideal place to go for the stock. If holding the stock, 21 DMA can be kept as a stop loss level. Right. Okay.
Yeah, Rishit Vakare. I'll just try to wrap up a couple of queries before we end the session. Raj, can you give me the chart for Deepak Fertilizer? So the stock has been out of momentum, as you can see, for the last 6 to 8 months. Raj, can you show me the stage count for the last base? Okay, it was a stage 3 count, and as you can see, the breakout wasn't successful, and after that, the stock has probably taken down all its key moving averages. Currently, I mean, today's action was good for the stock, and as you can see, it reclaimed its 50 DMA and 100 DMA. But as what Raj was pointing out, it's the 200 DMA is still very far away from the stock. The stock is not forming any kind of base. Plus, another negative apart from the RS rating is that your fund holding for the stock is declining, and you don't want to enter into a stock where your smart money is moving exiting out of this stock. So I mean, according to our criteria, our buy zones, it's not coming in there. I mean, if someone would have bought it, I mean, probably near the lows, or I mean, or around the current reclaim, can keep a stop loss of 7 to 8 levels, or a breach of key moving average such as 50 or your 21 DMA. The other we can look is Avanti feed. Just put it right now. I mean, again, pretty similar as you can see. I mean, the stock is trying to come off lows, but the price strength, your RS for the stock is very weak, and even your RS line is pretty flat apart from the spike it just showed today, and just reclaimed its 200 DMA, but ideally it doesn't come into our watch list. Why? Because no base is getting formed, plus your EPS strength is not that good, price strength is poor, and plus your fund holding for the stock is declining. So it requires an improvement on all the fronts, probably for it to come in our, I mean, according to the William O'Neill's watch list. Raj, I mean, you can take up, one or two queries and just wrap the session.
Okay, I'll take one or two queries and I'll wrap up the session. We're already 1 minute past 5:30, which is the scheduled time. I think that in 2 to 3 minutes I'll finish queries and then we'll close the session. I'll take the JBM Auto. Mr. Praveen has asked about JBM Auto and what is the exit point for this stock. This stock has done very good from stage 3 breakout. I don't know what is your buy point but if you are looking for an exit, it is very extended from the moving averages. 21 DMA is still 18%, even after the fall of 12% in the today's trading session. That is a very high extension from the moving averages. Depending on a buy price, you can determine the exit price. But on general terms, you can exit in the today's trading session as well because a huge set of selling happened in the today's trading session. A 12% down move has not happened for the stock if you look at last 1 year or 2 years of time period. And volume wise also, it was nearly 200% average volume, so almost 2 times the average volume. So this is considered as a huge selling. So during the market hours, you could have exited, but in the tomorrow session, the stock again opens in the negative territory. But in the first 1 hour itself, it's better to exit and move and watch out for stocks which are looking good on the current market. If you pick any stock out of 3 stocks, 2 out of 2 stocks will be good. On the probability of those stocks doing good will be on the higher side. So there is no major concern in the current market while picking the stocks. You will find ample opportunities, or you can exit when the stock opens in the negative territory in the tomorrow session. I'll take one more query, final query for the today's session. Bharat Bijlee. It's a very small market cap company. You can see its market cap is around 1,800 crores of rupees. Ratings wise, it is a very good. It is placed very good on canceling methodology. EPS, RS, all the techno fundamental ratings are very good. Stock has also broken out from the stage 5 double bottom and it has given very good return on 20% gain from in the last 2 months, which is considered very good. I don't know what this question is about, but if you're looking for a fresh entry in this particular stock, definitely not a good time to enter in this stock. Already a breakout from stage 5, and you can see it's very extended from the moving averages as well. Let's let the stock to form another base or let the stock to reset its base, and by then if the fundamentals and technicals if they stay intact, then you can look for this stock. But it is a long term game. If you're looking for in the current market, if you're looking for fresh addition, definitely and kindly avoid late stage bases, which is already talked about in the today's session and in the most of the sessions which we conduct. We always talk about the riskiness involved in the late stage base breakouts. If you are holding it, I can keep 21 DMA or 50 DMA depending on your buy price. 21 DMA has not given support, but 50 DMA can give as a support for the stock, which is around 9% from the current market price. And if that level is reached, you can exit from this stock. Sorry, we tried to answer most of the queries here, but there have been a very huge number of queries which came up. But I think we are trying to give our explanation about the cancel methodology. If you are aware of the cancel methodology, you can take calls on your own. You can open any chart on MarketSmith India website, and if you look at the ratings and base pattern, and if you are able to understand price volume action, then you can take a call, either buying call or sell call yourself. That is the overall motive of this podcast which we do, or the webinars, seminars which we conduct frequently. That is the overall motive to educate investors here. It's not about the number of stocks which we are taking, but it's about the content which we are able to deliver, or which we are able to transfer the knowledge towards clients. That is a major objective. Thanks everyone for joining this session, and have a good evening. And tomorrow morning again we'll be having a pre-bill. We hope to see you again at 8:45 in the morning. Thanks everyone.